Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. Got an interesting one for you. Guess who showed up in the news again? Blackstone and Blackrock. So let's first talk about Blackstone. Blackstone just recently got a cash injection investment, call it bailout money if you want, from University of California for I believe about $4 billion. I'll post the link for you to read up on this one. But very interesting because we heard just recently from the Federal Reserve with their minutes coming out and saying that we don't want this unwarranted easing in the financial markets, in the financial conditions that you're seeing the stock market and so on go up. We don't want this unwarranted easing, right? And when you get money like that, $4 billion being just given and invested to funds that are already having a problem, just goes to show that, like I was saying, that be very careful with the buy the dip mentality or the easing mentality, because if that's the case, if people are still investing and inflation is not coming down, then it just gives more reasons for the Fed to continue with its rate hikes and continue to be hawkish and more hawkish. Right? Now, that's an article. You can check out that article on Blackstone in the description. And the other article that came out is on BlackRock. So BlackRock basically defers withdrawals for UK property fund. Very interesting. So the US fund giant BlackRock will defer third quarter redemptions from its 3.5 billion pounds, which is about 4.2 billion US dollars, from their BlackRock UK property fund. So this is from a source that told Reuters this, and this is a report from Reuters. I'll post this link as well so you can read up on it. And basically, it also talks about in this report, in this article, that BlackRock's UK property fund will defer withdrawals that were originally due to be paid at the end of December. A person familiar with the situation said, asking not to be named. It had previously also deferred second quarter redemption. So this is not the first time. It previously also deferred second quarter redemptions which were due to be paid at the end of September. The fund had 3.5 billion pounds in assets under management as of October. The open-ended real estate funds across Britain have been battling to meet a surge in demand for investors' exit against a backdrop of stubbornly high inflation and economic uncertainty. So again and again and again and again, you're hearing from Blackstone and BlackRock, which is very scary, right? These private markets are being hammered by higher inflation, lower demand, higher rates, especially with real estate or hard assets that that are not on the public stock exchange, that are not as liquid as selling a stock, having tough time to give their investors any money just because of this high inflation, high rates, the scare of recession, fear of recession, and most importantly, a liquidity problem because there's not much demand. There's hardly any demand. I don't know if you see in your area, if you see a lot of real estate signs up, you'll notice many of the houses have been up for sale for many, many months, and none of them are getting sold. It's because demand has dried up. Rates have gone up. Mortgage rates have gone up. It's very difficult to purchase a property right now. So when you get big funds like BlackRock, like Blackstone, having tough time, needing bailout money, having to defer their withdrawals, having to tell their investors, hey, we can't pay you right now, it's a very red flag, in my opinion, especially when it comes to these big companies that control a lot of assets. They're big behemoth companies. They're not small companies. And it makes me think, if they were to panic sell, I mean, how would they panic sell? There would need to be someone to fulfill that sale. And if there's some sort of institution, or is it going to be a central bank or what have you. I'm not saying that they're going to go under. That's not what I'm saying. I'm not saying BlackRock and Blackstone are done with. But that is definitely a risk you cannot rule out. You cannot rule out of panic selling of these assets from these big institutions, BlackRock and Blackstone. And if they do come out and they're ready to sell at any price possible because the investors need their money back, or they're forced to do it, or whatever happens, it is very much a bad sign, which basically would mean that the real estate market, especially in Britain and many areas, you could see completely plunge if they were to really hit the sell trigger and panic sell completely, right? So you can expect prices to come down. Now, will it? We'll see. We don't know for sure what will exactly happen, but definitely it is a red flag. You do want to watch out that if this continues to be a problem, if there's more bailout money or more investing happening, spending happening, asset prices are going up in the stock market or whatever, guess what? It just basically means for the Fed to do more. And if the Fed does more, hikes more rates, then, the private market is very much in trouble. I would say that. And if the private market goes under, private equity, VC, big institutions like BlackRock and Blackstone, I don't think the Fed will come out right away to bail private equity firms. It would only the only reason I would see it come to bail out if really you have massive discounted prices, massive crashes, or it trickles into the banking sector, into many of the banks, which I think that it would eventually if this scenario would happen. And this scenario that I'm playing out, please, I'm not calling that this is going to happen, but this scenario is a typical black swan event, right? So a black swan event is something that doesn't happen very often. It's something that it's not really priced in by the markets. It's something that is unknown. It is something that you don't expect. A black swan, like for example, COVID 2020. That's a black swan event. No one would have predicted that. Yes, 2020 was the year that a virus is going to hit everybody and everybody would be in lockdown. So no one really predicted that. That's a black swan event. And again, another black swan event that I could see is if these private markets, private equity firms, a lot of these big companies like BlackRock and Blackstone go under and completely collapse. Definitely you could see that trickle into the banking sector, into the markets, into the sentiment, and then eventually the Fed would probably step in. Now, would they step in to save BlackRock and Blackstone? I don't know exactly, unless if it really affects consumers and investors, then sure. But that will be, if they do step in, we've seen them step in to help banks. But if they do step in to help private markets like Blackstone and BlackRock and buy into their private equity funds, that is very much unheard of. So that's why I'm leaning on the fence of whether they would help, whether they would not help. It all depends on the situation. When would they not help? If it's again, out of their mandate, doesn't really affect banking sector, the consumers, and so on. It's just a bunch of private equity firms that went under. Or if it really does and it's really trickling into the economy and they need to do something about it, then for sure they can step in. We'll see what happens. But definitely this is already showing signs of red flags. Keep an eye out on this. I'll post the links for you to read up on it, and let me know what you guys think. Leave a comment below. Cheers.